Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by Vantage Point Financial. Hey everybody, welcome to the Inspire to Invest podcast. I have Mike Moreau here with me today, and he is a father, husband, and full-time corporate employee who's prioritized his goals and his why with a proper plan to achieve and create multiple streams of income by investing in various real estate strategies, primarily in Alberta, but also with other provinces. He focuses on fix and flips, adding value to distressed properties and the BRRRR method. And he's come to believe that when the why is strong, the how becomes easy. Mike's also passionate about inspiring others to open up to the possibility of real estate investing and how it can completely change your life. So thank you, Mike, for being here today. How are you?
Yeah, thank you, Serena. I'm doing very well. Yourself?
Yeah, having a great day. So you're episode, I think, 6 of the day. So we'll wrap up with you and end strong.
Busy. Love it.
So obviously in your bio, we talked a little bit about your journey as a real estate investor. But what I want to know is how long you've been real estate investing and what real estate looked like or what your life looked like before real estate really came into the picture.
Yeah, great question. So basically, I've been doing this now since 2018. So we're approaching pretty much 6 years to the date. It was in January. Not that it was a New Year's resolution. It was just a bit of I joined a 3-day event. Which was held in Calgary. And it did change my life. And the reason why I say that is it gave me the breakthrough moment of, hey, you know what? You don't need money or your own money. You do need money. You don't need money to get started. Now, what did life look like before then? Well, was working a corporate job, basically living paycheck to paycheck. It's not that I wasn't making great money or good money for that matter. It was just didn't understand really financials, didn't understand what money meant, how it worked, how to grow it. And like most, you get a pay rise, or if you're on commission base, you make big commissions. What do? You spend it. And then you're back to it's what we call the hamster wheel, the rat race. And that very much sums it up. That's what I was living, was sort of the paycheck to paycheck, living for the weekend. Couldn't wait for the weekends to roll around. And in all honesty, the pivotal point was when I found out I was going to become a father. And my wife was, we were expecting our first. And I sat there, I'm like, man, something needs to change. We can't continue doing this, just expecting different results. So I picked up the book, which I think most people have read. And if you haven't, I highly encourage it, is The Rich Dad, Poor Dad. It's a very, very simple read. And that's what led me to a weekend workshop, which opened my eyes to, hey, this is possible. And then from there, got educated, continued to invest in ourselves to the point where my wife was able to transition from her job. She was with the same employer for 13 years, transitioned her career after our second born. And we haven't looked back. And it's continuing to fill the different streams of income, which is exciting.
No, that's amazing. And I would say even Rich Dad, Poor Dad, I didn't read that until a couple of years ago. I'm like, why is this not in schools? Like there could be a whole course curriculum based on that. And I think, we're so programmed from an early age that you just go to school, you go to university, you get a job and buy a house and retire. It's like everyone follows that same path. But I think at the end of the day, like we have to find more creative ways, better ways to buy the assets, to pay for what you need to live on in life, and kind of just hedge inflation and to create that cushion. Because at the end of the day, like the jobs are not there to support you if anything goes wrong, or if you have a life event, or if you just need more time, right? So I think that's extremely important. Now, can you talk a little bit about, once you educated yourself, like what did your first acquisition look like? And then how did you manage to scale beyond that point?
Yeah, so what I would call my baby strategy, the first strategy that I learned was lease options. I think most of you that may not be in this arena would know it as rent to own. So that was our first strategy that we learned. And in fact, we did it in a small town of Wallaceburg, Ontario. So Southwest Ontario. We managed to do it within, it was a community. So there was a deal that was brought to my attention. Again, I had no money. Right. So I'm like, well, how am I going to do this? But Learning creative financing, I understood that there's joint venture structuring.
Yeah.
That's a possibility.
Yeah.
So there's an opportunity there. We actually leveraged my mother-in-law's, some of her retirement fund, gave her a return on
Yeah.
her money,
Yeah.
which allowed us. So we borrowed the money from her to then go do the deal.
Nice.
And again, we ran the numbers. It made sense from us from a cash flow perspective. It became a win-win-win. So
Yeah.
we were able to close a deal. She was able to make a bit of money on her money that was just sitting idle in the bank.
Yeah.
We were able to help her out, and we closed a deal, which put money into our pockets. And I'm not going into the detail because I don't want to confuse people of how everything sort of panned out.
Yeah.
However, it was a creative financing joint venture structure deal that we did on this.
Yeah.
And we had to close cash first and foremost.
Yeah.
So we closed cash, and then we ended up getting a mortgage to obviously reduce our our payments and increase the cash flow. But it was a bit of a stressful one, to say the least. I think everyone has an element of stress, let's be honest. It's always feels like it's down to the wire, regardless of how you get your ducks in a row. You know, things can go down to the wire because things can fall through when you're leveraging other people's money, mortgageability, et cetera, et cetera. So it was that deal, but that was sort of the proof in the pudding that if I can do this, what makes me different than others? And, you know, and I thought the same thing when I first went to the 3-day event. I'm like, how are they, if they're doing it, they're breathing the same air that I am. It's just a matter of following the who is doing it. They will show you the how. It's what you want that comes from within.
Yeah.
So,
and also taking action, right? Because I think a lot of people want different things, but they're just too scared to make that first step, right?
yeah. And it's a scary one.
Yeah.
You know,
No,
we're
I
not
can
talking
appreciate that.
borrowing a couple, you know, $100 from Serena and hoping to pay her back. When we're talking, it could be 80,
Tens of
90,
thousands or millions,
hundreds of
depending on what
thousands,
it is.
millions.
Yeah.
Yeah, it's a big thing. But I feel that, you know, when you're educated, you can do your own proper due diligence.
Yeah.
Two, when you surround yourself with, you know, a community that understands what it is that you do, can understand your thought process, you know, the fears will maybe sort of diminish a bit. There's always an element of fear, I think. But it's
I think that's important, though. I think that also gives you a sense of urgency and a
Mhm.
responsibility over the investor's money that you're leveraging, whether it's a personal connection or otherwise. Now, once you kind of went through this and you achieved that first deal, how did you then move forward, and how did you continue to move along at that point?
Yeah, great question again. Because we do tenant first, right? So we do that as opposed to property first for the most part. We got a bit stuck. And this is what I want people to know. It's like, you know, end of the day, your journey isn't like this. It's not completely up. It could be this with a bit of that and a bit of this and a lot of that before you start to have it go up.
Yeah.
It felt like, okay, we got our first deal. Energy, motion, everything is high. We could take on the world. Trying to do our next one, it took a bit of time.
Yeah.
And it was sort of draining mentally.
Yeah.
What I realized was the fact that I was so narrow focused on just one strategy alone.
Yeah.
So when we learned that, hey, we invested in ourselves, we got the return on investment. Well, in order to scale, we need to upgrade our education, our knowledge, etc.
Yeah.
So we kind of, let's say we went back to school to learn different strategies.
Yeah.
And I kid you not, once we did that, it was a bit of the blinder started to open up where the deals that were once passing through, we were the ones grabbing them as opposed to letting them go by.
Yeah. And what did some of those deals look like? Like, how did you pivot with your strategy when you maybe decided that what you were doing wasn't working?
Yeah. So was very always goal focused. End of the day, you know, obviously the why has to be there. Then our goal. What do we need to hit? Right? What are we looking to do? Then we started to look at the strategy that would complement that goal.
Yeah.
And then we went to the markets where they worked, because end of the day, the markets will shift. You got to be nimble and be able to pivot. So we shifted, and based on distressed properties, I understood that, you know, there's you can fix and flip, which could create capital. You could either, you know, leverage the BRRRR process, which is buy, renovate, rent, refinance, repeat,
Yeah.
and pull that equity out, pull some money out. So while still holding it as an income property. So we ended up, we pivoted to the distressed property because I was like, these are things that I was once scared of. And don't get me wrong, my first deal, you walk into a home, because I was so used to buying primary, you walk into a home that's distressed, you're going to have your higher self being, Mike, you're educated, you can go do this. And then your lower self be like, run away.
I don't know. What am I doing here? Yeah.
However, because of the mentor, I had a mentor to leverage as well to make sure, hey, if the deal is good, the money will follow.
Yeah.
And we leveraged that. And it was a scary one because we, at this point, we were the ones who found the deal. We are the ones who went out there, raised the capital, found the mortgage, someone to hold the mortgage.
Yeah.
And again, you're not talking dollars and cents. We're talking, hundreds of thousands of dollars to finish this project.
Yeah.
But as it started to materialize and the numbers became more and more true, it was addictive.
Yeah.
Because we just did this with none of our own money again.
Yeah.
And then we started to rinse, repeat these sort of types of projects.
Yeah.
So yeah, it was we went to distressed properties and started to leverage that from a fix and flip. We started to leverage it from an income property after we refinance, etc.
And have you been primarily focused on single family properties, or have you considered some multifamilies as well?
So we've been doing a lot of duplexes. Again, I'm not all about the biggest or the shiniest ones. It's the numbers. Where do the numbers make sense? And with that, a lot of these duplexes in Calgary, Edmonton, and throughout Alberta, it became a bit of a rinse repeat. And the entry point for folks that had maybe a little less capital could still get into it from a joint venture perspective. And even on a 50-50 split, the cash flow was still strong.
Yeah.
Both us and our money mortgage holders.
Yeah, no, that makes sense. Now, when you look at, this past 5 years, what would you say is one of the biggest obstacles that you've faced so far?
So the biggest obstacle is, I think, it's, as we all know, interest rates went up. The market through COVID did some funny things. The biggest thing that I learned was to stress test yourself.
Yeah.
Because I not funny enough, because I do feel for the folks that have not stress test themselves.
Yeah.
They're upside down, maybe in an underperforming negative cash flow and investment, or have lost the shirt off their back or over leverage, et cetera, et cetera. There's a number of things that went wrong. Because we got educated and we learned about this, we understood that, hey, when you run your numbers, make money in the buy, which protects any sort of downturn to a certain degree. 2, make sure it cash flows. Because I think people, just run their numbers so tight and are super, they're just not conservative enough. Yeah. Well, as soon as interest rates go up, well, then there goes their cash flow. So we do sort of a worst case, most likely case, and a best case scenario. And if we can get the worst case scenario to cash flow, we will invest. And then the other thing is, I always say you have to have 2 to 3 exits.
Yeah. No, that's smart. Yeah. And I think that's smart just from a passive investor's perspective too, right? Like when anyone is thinking about joint venturing, I think those are all your important questions to understand not only how the numbers are looking, but what happens if circumstances change or unexpected things happen, but also really what those exit strategies do look like if it's something where you need to pull yourself out of the hole, right? Now, what would you say you're most proud of now looking back at your journey? Like, is there something that you look at as like your biggest success up until this point?
I just think it's, getting out of your own way. And I know that's not like a huge answer, but it's getting out of your own way. Because anyone can do this. Again, started from zero. We're talking a couple $1,000 to my name, paycheck to paycheck, just 6 years ago. And to grow it to the point where, our lifestyles have changed.
Yeah.
Our kids, I think what I'm super excited about, I have a 3 and a 5-year-old. And already, it's like revenue minus expenses equals, and they say cash flow. And you're just, it's being able to teach them that, hey, you can go do whatever it is that you want to do. You don't have to rely on a job. You don't have to even worry. And for those this may offend, but you don't have to worry about going to post-secondary if you don't want to.
Well, it may not serve your goals, right? So
totally. So it's just having a different relationship to money.
Yeah. No, I can completely understand that. So on that note, we're just going to take a really brief break for a word from our sponsors, and we'll be right back.
It's Megan Betker, wealth coach and real estate investor from Victoria, BC. I've spent a decade helping business owners and real estate investors safeguard and supercharge their wealth. Today, I want to share some golden nuggets for real estate investors. Tip 1, diversify. In this ever-changing market, having a mix of assets is key. Tip 2, leverage the power of infinite banking. It's not just a tool, it's a game changer. Whether you're a seasoned pro or just diving into the real estate, let's connect. Visit vantagepointfinancial.ca or follow us on Instagram at Megan Betker.
Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. I value transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable throughout this entire process. Our homes are where we eat, sleep, relax, and play. My clients' best interests are at the heart of everything I do. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I want to help you fulfill your goal of home ownership and become your trusted real estate resource for life. I can't wait to share my passion for real estate with you. More importantly, find you the perfect house to turn into your home. Looking to buy, sell, or invest in Durham Region or Toronto? Let's chat. Hey everybody, welcome back to the Inspired to Invest podcast. I have Mike Moreau here talking to us about his journey as a real estate investor over these last 5 years, focusing on fix and flips and the BRRRR strategy and buy and hold. And I guess one thing I really want to know is what's the craziest thing that you've experienced as a real estate investor up until this point?
The craziest thing, well, where do you start? Again, we do distressed properties. Throughout renovations, there has been some, and I almost don't want to say some of the stuff that I found in some of these homes, but we're talking, for one, because this is appropriate, it's not inappropriate for any podcast or what have you, is we were doing some ceiling type work.
Yeah.
Found fishing rods.
In the ceiling.
Now, mind you, they weren't the best fishing rods. Otherwise, I would have kept them because that's one of my hobbies is going out fishing. But it was finding that and some other weird things, which I would rather not disclose on here. But yeah, we found a bunch of funny things throughout that. And then the other stuff is just every deal is completely different.
Yeah.
You can get down to the wire on every single deal, but what I find is you have the right power team member. And what I mean by power team member is, realtor, mortgage broker, lawyer, accountants, etc.
Yeah.
As long as there's alignment when you vetted them, and I say vet them in terms of doing due diligence, because at the end of the day, they may be good at what they do, but if they don't align with what you do, maybe they're not the right fit.
Yeah. They may not have the same perspective, right? So
yeah, you'll always get the deal done. And I just think that that's the biggest thing is, if you want it bad enough, you'll make it happen. If you have the right people on your side, you will make it happen.
Yeah. No, for sure. Now, I know you talked a lot about educating yourself. What would you say is some of the best advice that you've ever been given?
Best advice is trust the process. Again, everybody, myself included, hey, I'm fully at fault for it too, because it's a scary thing, is wanting everything lined up, wanting to have it perfect before you pull the trigger.
Yeah.
And again, just kind of going back to what I said earlier, if the deal is good, the money will follow.
Yeah.
I look at that first deal that we did. There were so many thoughts running through my brain that would have scared me to walk away, to go back to just go back to your job, stick to the normal.
Yeah.
It's trust the process. And when you can do that, take that first step.
Yeah. Yeah. No, absolutely. I think that that's so important. Now, is there something that you and your wife have kind of thought of when you think of your financial freedom number, or like, what you'll need to see kind of happen to be like, yeah, we've made it,
Yeah. I don't think there's ever enough. To be honest, when it comes to that, we have now what I call the circle of wealth is your active income, you have your passive income, and your portfolio, right? Just to give everyone a bit of a perspective.
Yeah.
I still work full time. And some people ask me, why do you do it? Well, I still enjoy what I do. Still enjoy it. And it's very flexible. She, on the other hand, enjoyed what she did. She was with the company for 13 years in project management. However, we had 2 kids, and it was the freedom. We got a bit of a taste after the firstborn.
Yeah.
What the rushing around, getting the kids out, picking them up. It was nothing but chaos to be like, what for?
Yeah.
So now it's at the point where we have our active income. We have multiple investments in terms of different strategies and what have you that feed the passive, and even our equity. We do trading. We do a number of different things. It's all about putting your money to work.
Yeah, absolutely.
Yeah.
I think that's so important. There was someone that I interviewed a while back, and that they said you always have to keep your money moving is probably the best thing. You never want it just sitting dormant in an account, and eventually that could like negatively amortize if it's just sitting there not doing anything, right?
And so I want to kind of, if I can, just kind of shed some light on money.
Yeah. I've
been educated that you have to be comfortable with leveraging debt to create wealth.
Yeah.
I have lent credit card balance transfers for short-term rentals for people to furnish their Airbnbs, and I've made money off balance transfers, double-digit returns by leveraging the bank's money. Yeah. So even that, when you have a home equity line of credit, a HELOC, if you have a line of credit, think about what you can do if you were educated. You have to, let's put it this way, you have to start to think like the bank.
Yeah.
With this. And that's what they do. When they give you a credit card, they give you this. Most people will just, unfortunately, go swipe it on a nice tan or something shiny in the parking lot or your driveway. It's leverage it. But
I mean, you're speaking my language. Private lending has been my bread and butter for the last 5 years because, like you had a young family, I had my daughter, and my business couldn't operate during the pandemic. So I was literally able to use my home equity line of credit for private lending. Yes, in the glory days, I'd pay my 3%, but I would be making anywhere from 12 to 20% on the money that I loaned out. And I was able to make enough that I tripled the money that I used to take from my business.
Totally.
And aside from setting up the deals, there's really not much work other than just tracking the deposits as they come in every month, right? So that gave me this return on time and, the flexibility to spend that time with my daughter. I didn't have to worry about trying to go out and get a job when she was 3 months old, when basically like my business came to a grinding halt, right? So I absolutely understand the power of passive income and just using what you have available to you. It doesn't necessarily mean it has to be cash in the bank. It could be what you have access to and what the credit looks like. You just have to be very careful and smart, because at the end of the day, you're still on the hook for the money you borrowed. So I think you have to vet everybody appropriately and get good, strong referrals and understand the due diligence process. It's just like underwriting a regular active deal to understand what it's secured against and what the process is like if anything ever does go wrong. Now, I guess just in terms of how real estate has changed your life, obviously you talked about it a little bit, but if you were to really sum it up for people, how does that look now for you in terms of time, freedom, opportunity? Obviously, it's had a big impact on you. Maybe you can shed a bit more light on it.
Yeah, I think it boils down to control. You can start to do the things that you love. Now, that's not to say that, hey, Mike works an hour a day and, can go do what he wants. There's still nights where I'm burning the midnight oil. There's still mornings where I'm getting up at, 4:30, 5:30, 6:30 in the morning, all depend on when my boys get up, but you're doing it for you. And I think that's the biggest thing. And, Jim Rohn, for those of you who may not know him, was a wealth of knowledge. He has passed, but he is a big philosopher. He always said that, wages will earn you a living, profits will earn you a fortune. And that really stuck with me in terms of when you go work for somebody else, you're fulfilling their dreams and making them rich.
Yeah.
When you can start your own business, and it does, real estate has just been a vehicle that has allowed us to do what we want passively and actively, but it doesn't mean I'm sitting back kicking my feet up all day. Can you do it if you want? Absolutely. But when you love what you do, it's never work.
Yeah. Yeah, no, absolutely. Now, obviously the name of this podcast is Inspire to Invest. So to your point about quotes, is there anything in particular that really motivates or inspires you?
Yeah, I love Jim Rohn. I highly recommend anyone, if you're just new to it, it's not necessarily investing. It's a lot of mindset, because you have to get out of your own way and visualize something and also believe in it.
Yeah.
Jim Rohn has always said, motivation is what gets you started. Habits will keep you going, because, hey, for those of you that are listening to today, might be inspiring enough to motivate you to maybe go pick up a book, but you have to keep at it, because this is not an overnight thing. It's not a get rich quick.
Yeah.
I've been at it for 6 years now, and there's been some ups, some downs. However, am I forever grateful and thankful that I took that leap? 120%. Totally. So you gotta create, it's the small habits, just start reading a book, start doing this, start doing that, get educated. And once you can see the possibilities, it's, I always say it's simple what we do. It's just not easy.
Yeah. Yeah. And it takes a level of confidence and courage, I think, to take that step and just to break free of what everyone else thinks is normal. Like, I think when I have talked to people about some of the real estate investing, in the beginning, I was kind of quiet about it. And then the last year I've talked about it a lot more. And I think people are like, you're crazy, like the average person, just because it's not mainstream, it's becoming more and more mainstream, because I think there are a lot more education platforms, more events and stuff like that. But I think people are going to have to do more, because no one can keep up with inflation. If they're getting a 3% wage increase and inflation is like 20%, or like properties are going up by that percentage, like I think it's the only true way they can really get ahead and try to kind of live your life on your own terms. So with that being said, is there anything in particular you want to leave the audience with today?
Never lose, like if you have a dream, like if you truly want to do something, and go after it. I think the biggest thing is most people sit there afraid to start small. What will people say?
Yeah.
Afraid that they might not know it all. I go back to failing like a child, right? And I've heard it a number of times, but and my kids have taught me, they come out not knowing how to speak, how to walk, etc., but through practice. And the same goes for this. You start any job, you're never the greatest at it. You won't be the greatest at running numbers, doing due diligence, raising capital, all that stuff. But with the right people around you, they will start to be the magnet, and you'll gravitate, and you will learn this. And I just say, there's opportunities out there, just go get educated, go take action. Don't worry about having it all lined up.
Yeah.
Just go do it. And things will start to, you'll thank yourself. You'll thank yourself, because you can create the beauty part about this is there's no cap to your income. Yeah.
I think that's something that just more people need to strive for. Now, if anyone wants to get in touch with you to learn more about your opportunities, what's the best way for them to reach you?
Yeah, you can find me on Facebook. I'm also on Instagram. Those are kind of the two, I think everybody.
Thanks. Yeah, of course. Some people have like a preferred, some people like my website, my email, but we'll include obviously everything in the show notes below. Of course, thank you for your time today. And for anyone that is tuning in, please make sure that you like, comment, and subscribe below. You can also follow along at Inspire to Invest podcast on social. And of course, remember, when you invest in yourself, the sky's the limit. Thanks again.
Thanks, Rena.
I'm just going to hit stop. Thank you to Vantage Point Financial for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.